Hi, Assalamualaikum. My name is Mazliatul Akmar Binti Ahmad. Now I will talk about introduction for company in Malaysia. Company in Malaysia under the Companies Act 2016 or under the previous law which is Companies Act 1965. Company has a wider definition, include any entitled form or incorporated or existing in Malaysia or outside from Malaysia. Chief Executive Officer is called as a registrar. A few information required for incorporating any company. So the first one is name of the company, status of the company, either public or private, nature of the business, registered office. Next, there are three classifications of company based on Companies Act 2016. The first one is company limited by share, the second is unlimited companies, and the last one is company limited by guarantee.
The first one is public company, also known as Berhad PhD. This company offer issue to the publics and strict in financial because their financial public can see their financials. And then they need a minimum 2 shareholders, and it is a Malaysian citizen, and there is no limit in shareholder. This second company is private company, also known as Berhad. This company is separate legal entity. They may purchase its own properties, enter into debt, sue or be sued. Their own name. This company need minimum 2 shareholder or 2 director, and they have maximum member where they does not exceed 50 members. One is Azman private company and not hard direct or indirect by any corporations. This company no more than 20 members, and none of them is done in corporations. This company one is we have Frogin company, where Frogin company can register their branch in Malaysia, and they need minimum 1 director. They can be either the Frogin. The shareholder may be investor or corporate entity. Fifth one is government limited company. Government limited company, also as GLC, are defined as company that have a primary commercial objective and in which the Malaysian government has direct controlling stake. We're going to know what is required by CCF. They need a financial statement and reports need to be circulated to the member of the company within 6 months of financial year. And a company is required to file the financial statement and report with the CCM within 30 days from the date of circulation to its member. Usually, the company secretary will be in charge to file the annual return, the company name and registration number, simple business activity.
Assalamualaikum and hi, I'm Aishah Binti Fakri, and today I will present about the financial reporting requirement based on Company Act 2016 and the Financial Reporting Act 1997. There are 4 requirements needed to perform the financial reporting. The first one is financial statement. Financial statement is basically prepared by the director and interviewer, and this need to be audited first. The next one is accounting record. The accounting record must be saved properly in the records because it is a must in financial reporting. The next one is approved by the auditor. The auditor must approve the financial statement in order to perform the financial report. This is because all in the financial statement need to be audited before to make sure that it is a correct amount and everything. The next one is internal control. The internal control is to assure the trustworthiness of the report. Okay, now let's move to the element of annual report. There are 6 elements of annual report. The first one is chairman statement. Chairman statement content of company profile and the chairman opinions. Second one is corporate governance statement. Malaysian Code of Corporate Governance make the code for the annual report and the information regarding board of director. The third one is audit committee report. Consists of director, independent, senior manager, executive, and state that the area of responsibility and manner. The fourth one is statement of internal control. Internal control is to maintain a system to safeguard shareholders' investment. Require listed company in order to issue the statement in annual report. The fifth one is social responsibility statement. This is social responsibility being disclosed. Make the statement at their workplace. And the last one is financial statement. This is include the director's report and auditor's report and the financial statement. Thank you.
Legal requirement in Bursa Malaysia Securities Berhad. The company must make a preliminary statement within 6 months following the end of the financial year. The second is listed company have to make additional disclosure regarding the performance of the company. The last one is listed company are to issue half-yearly reporting regarding their performance too, within the 3 months following the end of the half year.
The advantages of changes from partnership to the company, first is limited liability. If the company cannot pay the debt, only the company will be liable. The shareholder will not be liable, so that the shareholder personal asset protected. The second is perpetual life. If the owner of the company is died, so the company can still operate it. This is because company will hold annual general meeting every year for the shareholder. From that, they can vote for the director of the company. Third is company can make more capital. This is because the company have to sell their share to the public, so that public can buy their share. From that, they can earn the more capital. The fourth one is separate entity. Separate entity means that the asset or liability from the company and the shareholder is separate. The last but not least is professional management. The company's management is in the hand of the director that will be selected by the shareholder during the annual general meeting. These advantages for the changes from partnership to company is first is complicated. This is because the owner of the company have to register to Suruhanjaya Malaysia SSM. There are many documents they need to submit to the SSM. Other than that, there are many legal requirements for the company. Second one is account cost. When the company want to open, they must have an accountant. This is because the accountant must prepare the financial statement. The third one is double taxation. This is because the company tax and the shareholder tax is separated, so that the company must pay more taxation. The fourth one is ownership. This is because the ownership is based on the vote from the shareholder during the AGM, annual general meeting AGM, so that when shareholder have many shares, so that they will be more power to vote and more count for them. Last but not least is financial affair will be disclosure. This will make the competitors will compare their financial statement, and then they will plan their strategy to make sure that their profit is more than other company.
Today I will present you guys about differences in financial statement between company business and partnership business. First, I would like to present you guys about company business. First, a shareholders fund have many categories such as share capital, retained earning, revenue, and capital reserve. Second, a company is imposed tax as it is a separate legal entity. Third, prepare a statement of changes in equity to see changes in share capital, profit, revenue, and capital reserve during the year. Third, company business must follow proper accounting concept, principles, rules and other regulatory framework. Last, company does not use the capital account to illustrate the investment, but they use shares account to show all the investment that contribute by its owner. Now let's move to the partnership business. Okay, first, partnership business have many number of capital account depends on the number of partners in the partnership concern. Second, profit and loss is distributed according to the ratio that agreed by partners. Third, in the income statement will show a schedule that show how the net profit or loss distributed to partners. Fourth is balance of capital amount of each partner will show in the balance sheet under the balance sheet under owner equity. Last is not only income statement and balance sheet statement of partner equity is prepared in order to show changes in equity of each partner at the beginning year. I think that's all from me. Thank you.